All right. Well, hello there, ladies and gentlemen. This is Lee Arnold, and I want to welcome you to this very exciting and somewhat impromptu webinar. The reason it is impromptu is there's some things that occurred that I was so excited about I wanted to share with you guys. But also, I wanted to get the information about double-digit returns into more of your hands. But I wanted to break it down. And so today's presentation is going to be very different, especially for those of you that have been involved with us for any length of time. You know, our presentations are usually very scripted and we've got PowerPoint slides for everything. This one's going to be less formal in that I'm just going to be basically showing you different documents and PDFs and really kind of opening up the kimono of the inner workings of Secured Investment Corp, Kogo Capital, our equity teams, our investor relations teams, and all of the things that are happening behind the scenes to get you guys these double-digit returns, right? It's one thing to say double-digit returns or the secrets of double-digit returns, but I wanted to help you guys understand all that goes into getting you these double-digit returns, the due diligence that's taking place on our side, so that when you look at these notes that we have originated, that we have available, that you better understand everything that went into them. Now, this is not a sales presentation. I'm not going to solicit you to buy anything. This is really just for educational purposes, because if you're here, it's because you're looking to get better rates of return on your investment dollars. And even in preparation for this presentation, I just went in and checked my 401k balance and return. And so far, I'm tracking like a 7.42% rate of return. Unfortunately, I cannot invest my company-sponsored 401k into these double-digit returns. I wish that I could, because that's exactly where I would be putting them. Now, the good news is I can invest home equity into these double-digit return notes. I can invest self-directed IRA funds into these and any cash that I might have. So for those that are looking at retirement and how much cash am I going to need and what yield am I going to need at returning to be able to retire with the same type of lifestyle, that's a lot of the types of questions that are being asked around the kitchen table these days. And the other thing that makes this webinar unique is I'm going to open it up to questions throughout, all right? So you guys can be typing in questions. So as I'm going through some of these examples, and you think, oh, I want to ask that question, go ahead and ask it. Now, I won't be stopping necessarily in the midst of it, but once we get done, or once I get done showing you a certain thing, I'll go in and see if there's any questions related to that topic. My goal here for this is not to consume a lot of everyone's time. We should be wrapping up here. Let's call it 25, 30 minutes, and we'll just see if the questions take us beyond that. I know it's the middle of the day for a lot of us, so I want to be respectful of time, but I want to get you the information as quickly as I can as well. Of course, the standard disclaimers, these are required by counsel. Past performance is not an indicator of any future results. All investments contain risk and may lose value. Any historical returns, target returns, expected returns, probability projections may not reflect actual future performance. Investors should not rely on forward-looking statements because such statements are inherently uncertain and involve risks. While the data we use from these third parties is believed to be reliable, we cannot ensure the accuracy or completeness of data provided by investors or other third parties. We do not make any representations to the accuracy or completeness of the information contained on this presentation, undertake no obligation to update the information. Neither Secured Investment Corp nor its affiliates are registered investment advisors or broker-dealers and do not provide investment advice. No communication with Secured Investment Corp or its affiliates through this website or any other materials is intended to be or should be construed on any investment, tax, financial, accounting, or legal advice. All right, there. Got that out of the way. Then, of course, page 2, there's no assurance that any strategy will succeed or that any program will meet its investment objectives. Secured Investment Corp High Yield Fund 2 is open to accredited investors only. This is referring to our accredited investor fund, and then Circle of Wealth Fund 3 is for our non-accredited investor who want to participate in our equity funds. Now, not here to talk about equity funds here today. I'm here to talk to you guys about notes. Now, what you responded to in being here was the top 10 reasons to join me on learning about these double-digit returns. Number 1, you don't have to be a landlord to do this. Number 2, it creates monthly cash flow. Number 3, you're getting targeted returns that can be double digits. I'm also going to show you guys how you can be earning an additional 1% over the stated or an extra 2% bump over the stated. I'm going to take you to the website and show you some of those opportunities as well. Our notes are anywhere from 6 to 24 months typically, so you're not locked into long periods of time on these deals. You are helping to support the housing market. You're helping to build out local communities. You're able to choose your level of investment and risk, and your investment is backed by real assets. There's no shortage of demand, and we've already done the hard work for you in underwriting the deals, okay? So now, as you guys know, we are in the private money lending business. And so when somebody sends us an email and says, hey, I'd like to borrow money, and I've pre-pulled up a lot of this information. So let's go over here. I want to pull up the first one right here. And this is going to be the loan cost worksheet. All right. So somebody calls us up and they say, hey, I'd like to borrow some money. So this particular borrower has a property at 1001 East 48th Place in Gary, Indiana. Okay. Now, this is a deal that closed back in October of last year. The borrower is looking for $45,000 to purchase the property. And then they're going to need $86,000 to do the renovation on the property, or $85,850 over here. You can see that here. Okay. And I just want to make sure that you guys are on the audience view. Yep, perfect. Okay. So this is our underwriting worksheet within the organization. Okay. So we can see all of the things, the note rates, the down payments coming in from the borrower, all of this on the underwriting worksheet. Okay. Now, the next thing we're going to do is we're going to go to Zillow, and we're going to actually look at the property. Okay. Now, this is the property in question. So we go into Zillow. And we have other tools that we'll use from a valuation standpoint, but we just want to do a quick cursory overview. All right. What is this person buying for $45,000? Now, as you can see, what they're buying is a shell. And the question that we have to ask is this shell worth $45,000? So we go over here and we do what's called a Zillow overlay. Now, Zillow refers to this as lot lines. I call it a Zillow overlay because it gives you insight into that market. Now, anywhere you see the $500, this is be your monthly rent. 92,000 over here. Here's a parcel for 123. Here's one at 92. Here's one at 118. So you can see this is a lower income area, lower price point area. And I'm wanting to see anything that's going to support this 170 value going in. Okay, so this is just a quick overlay here. Now, if we can see, okay, there might be hope for this file to have a shot, the next thing we're going to do is we're going to order an appraisal. Okay. Now, what I'm showing you guys, and I'm showing you this in minutes, this is probably a couple of weeks process as we're going back and forth, interacting with the borrower and determining that they have a good deal, that they're going to be safe. We don't want anybody buying something that they're going to potentially lose money on. So we want them to have a great experience, because ultimately we are going to fund this loan through our private equity funds. Once the loan is funded, we're then going to sell the loan to a one-off investor, which could be one of you. Now, I haven't seen all the names here, but I'm sure that some of you that are joining us right now are existing private note buyers that purchase this type of paper. Okay, so here is the report from the appraiser. So the appraiser goes out there, he or she does all of their work. Subject resides in the northwest of Indiana, in the south portion of Gary, close proximity to the Indiana-Illinois state border, schools, house of worship, local shopping centers. Okay, so many of you have seen an appraisal. This is what we're looking for. Now we're looking for two numbers. Okay, we're looking for what is the as-is value of the property, and we're looking for what is the after repaired value. So he will go over what the borrower will submit, which is a breakdown of all of the things they're going to do to this house. So he says kitchen remodeled less than 1 year ago, bathrooms remodeled less than 1 year ago, subject will be in good condition when repaired. See attached improvement bid estimates. The total budget for renovation repairs is $77,800, and the budget and scope of work is attached to the report. At the time of inspection, all utilities were off and unable to test functionality. The sketch depicts the layout of the subject being repaired. So I'm going to skip down here to the bottom, because this is where they will submit the renovation and repair budget. Okay, so here are some of the surrounding comparables. Here's one at 35 grand, here's one at 43,000. Now these are comps supporting the as-is valuation, okay? Now, this is a comp supporting the after repaired valuation. So 194.9 on this one, 144. Here's a comp at 180. Here's another one at 209,000, just 3.8 miles away. Here's one that sold for 220. That one's only 0.4 of a mile away. Here's one at 158, 0.3 of a mile away. So you can see that the appraiser is very thorough in all of the work or in the valuation here. Here's the subject parcel, and the appraiser will go out on site, walk through the property. He'll do a sketch of the layout and the floor plan, and then he'll also give us interior photos. Okay, now as you can see, this house is a shell. All right, so the previous person who had it went in, gutted it, started doing the renovation and repair, and for whatever reason could not finish the work. So the investor who's bringing this deal to us is saying, hey, we think this property has upside. We think it could be really cute. We would like to borrow money to go in there and do the renovation or the repair. Here is the original listing form. So when this particular borrower purchased this property, you can see the remarks from the agent right here. It says this home is a blank canvas with a solid foundation. The new roof, windows, siding, soffit, and gutters provide a strong start. Now, that's an important component. New roof, windows, siding, soffit. So all of the exterior stuff, the really expensive renovation and repair, has been completed. So the investor is stepping into a situation where the property just needs the interior done. So one of the things that we require is a contractor's bid of what it is going to take to make this property habitable. All right. So here is what the contractor says needs to be done. Contractor is going to install new gas lines for the stove, furnace, water heater, dryer. They're going to install electrical through the entire house. So that's going to run $8,400. They're going to install plumbing, $5,500. Vinyl flooring, $6,000. Drywall, $10,000. That whole house is going to have new drywall put in it. New furnace and AC units, $9,800. New doors and trim baseboard, doorknobs, $8,100. New kitchen, total of 10 cabinets, white with granite countertops, $8,000. Insulation throughout their home, $4,000. Deck, $4,000. Then they're going to put in 2 full bathrooms, sink, toilet, ceramic tile, $6,000. Now, guys, I'm going to show you the finished product. So what you are going to see before we're done is everything that's been completed as per this inspection or this bid from the contractor, okay? So here is the total cost of labor, $36,000 in labor, $41,000 in supplies for a total of $77,800. So what the appraiser now is saying, he's saying, look, if you will go through and do the work on this property, when you get done, I believe that the value of the finished product is going to be, and I'm looking for his, there it is, okay? So here is what the appraiser is telling us. The as-is value of this home is $45,000. The after-repaired value is $175,000. So now when we go back to our Zillow overlay, which was right here, okay, here's a 36, here's a 45, this one they're buying. So the as-is makes sense at 45, and the appraiser is saying, based on everything I've seen, if they go in and do all these repairs, it's going to be $175,000. Now, when we go in and close this deal, okay, here's the actual closing document from the title company, okay? So here you can see the borrower. Here's the contractor that's going to do the work. Here's the lender. You can see that High Yield Fund 2 is the lender. We've got a $45,000 purchase of the property. We are going to lend this borrower $113,750, okay? Then you can see the taxes, the fees, the closing costs, and this is the really important line right here. Rehab escrow funds to Lake City Servicing. Now, we had a situation just last week where somebody was looking at one of our notes and they said, oh, I'm not buying that property. You guys lent $113,000 on a property that's only worth 45 grand. Well, what the investor wasn't considering is we send $45,000 that goes to the seller of the property, and then $85,000 is going to be held by Lake City Servicing, and it will be released to the borrower in what's called draws as the property is completed. So as the work is being done. Now, this is the draw report that is completed by Lake City Servicing. So Lashona or LaShawn being the borrower, okay, she wants to do, here are the draws. So we look at, looks like this one is set up for a total of 4 draws. So $85,000 set up over 4 draws is going to be roughly, if you guys take 85, it's actually 77,000. 77,000 divided by 4. We're going to have 4 draws of 19,250 apiece. Okay. So in the first draw, what we need to see is we need to see that $19,000 worth of work has been completed. Now, remember the appraisal's photo or the appraiser's photos of the interior, right? So this is what we know when we close on this deal. So when Lake City Servicing gets that amount of 85 grand, this is the beginning stages of it. What Lake City Servicing now needs to see is the property is getting work completed. So here's the electrical being done. That's an $8,500 expense. You can see that drywall is going on in the interior. You can see that the bathrooms are being installed. You can see that floors are being laid. So Lake City's job is to verify that the work has been done. Now, before any money is released to the borrower, we will have a third-party inspector, you can see a shadow right here, physically go out to the property. Now, this physical on-site is going to happen 4 times because before any of this draw money is released to the borrower, we have to verify that the work has been completed, okay? So here you can see, actually, let's go, so draw 2. Here you can see the interior. Here they're pouring some new sidewalks coming up to the front porch here, starting the exterior deck that was part of that bid. Here is that insulation going in that they had put in $4,000 for the bid on. Here you can see that deck is now being installed. Here's some more interiors going in. This is all part of draw 1. So anytime you see a draw 1, that is part of the first $20,000 release of funds. Draw 2, draw 3, draw 4 is the completion then of the project. Now you guys can see this is a pretty exhaustive process. And when we fund a construction loan for a fixer-upper or a rehabber in that market, we are doing this process on every single loan. So construction lending, overseeing draws, it's something that we have perfected as a company over the last 15 years, which is why you can feel very good and very confident when Lake City Servicing is managing this process. Now, I'm showing this because a lot of people don't ever get to see this behind the scenes type of work that goes into managing and overseeing these draw requests. Okay, here's the air conditioning unit going in. Here you can see the bathrooms going in. Here's those 2-part vanities that were part of the initial bid. Here you can see the LVP flooring going in. Looks like these are all part of draw number, this is all part of draw number 4. And so if a borrower calls us up and says, hey, I need to get a draw, I've done this, this, and that, before any monies are released, we have to have that third-party inspector go out on site. Now, the borrower will prepay for all of these inspections. So part of our loan is collecting money that will get paid to the third-party inspector to go out and verify that the work has been completed. And you can see they're doing a phenomenal job on this. It's really coming together. It's really looking good. But the other thing I want you guys to think about is what this house looked like before the borrower got involved, okay? This was a house sitting on the MLS waiting for somebody to come in and buy it. Asking price was 45 grand. It's in a neighborhood, you know, and when you have vacant, abandoned property sitting in a neighborhood, it doesn't do anything for the surrounding properties. So when an investor comes in and does this type of work to a home, they improve the surrounding comparables. They improve the safety of the community. When it sells, they're going to create comps that provide value, that all now of the surrounding properties go up in value because of this work that is being done. Now, the reason I'm highlighting this one with you guys today specifically is as I was getting ready with this webinar, I got an email from Merle, and Merle works in our Merle works in Lake City Servicing. So just so you guys can see this, Here's the email coming over from Merle, and that was today at 12:32. So literally like 30 minutes before we jumped on here, I get this email, and she says, hey, moment of goodness, because we celebrate moments of goodness here in our organization every time one of our clients does great things. So I want to start by showing you this video that was filmed by the borrower after, hang on. So this was filmed shortly after they closed. So this is the partnership. This is a group of 4 ladies coming together to do this incredible rehab. So watch this video real quick. This after they got the insulation in. They've just gotten the new HVAC system installed. They're still in rough construction. So you still see the rough framing. Okay, so there's their video. I've asked them to send us a video now that it's completed, but I wanted to share this with you guys. It says, hi, earlier, it's a pleasure speaking with you. The video is pre-rehab. We put in the insulation and HVAC that you see in the videos. The photos are post-rehab. So now I want to show you guys the post-rehab photos on this. And these are coming over directly from the borrower. And let me do this. I'm going to move this over here so I can grab those more quickly. So we'll take this over here. Okay, I'm going to take that over to this side, and then I will open up these finished photos for you guys to see. Okay, so there's the living room area. Again, these are coming directly from the borrower. Did they not do a great job? I mean, look at these lines, just incredibly clean lines. The color scheme was fantastic. Did a great job on the backsplash. They put in the stainless steel appliances as we recommend through our real estate education training programs. Just a great, beautiful job. And you guys can feel free to go ahead and comment there in the question portal if you'd like. But this is the kind of investors that we are lending your money to. We both vet them out. We look at their previous projects. So this is a great now resume piece for them to do future deals. And a lot of the people who buy our notes have gotten into a place where they ask specifically, and they'll say, hey, do you have any notes from those 4 ladies up in Gary, Indiana? Because, man, they just do a fantastic job. They pay on time. They do amazing work. Their properties sell very quickly. And so it's not uncommon for our clients to be asking specifically for various investors who are out there fixing and flipping, because we do have a lot of repeat customers. And boy, I'll tell you, if you guys want to reduce the risk of lending, lend to somebody that you've lent to previously. The nice thing is that we are already doing all of this pre-vetting work for you guys, so you can see how it works. So here again, this is the draw, and then we have the final payout here. The final draw will go out once we have verified that all that work has been done. So final release of funds, and then they list the property for sale. Now here in Merle's email, so I'm going to take this back over here. This is the email coming from the borrower. Check out this amazing success story from our borrower, LaShawn Girl, with videos of pre-rehab. So they bought it on October 27th of 2023 for $45,000. We gave them a rehab budget for $86,330. The total loan amount was $113,750. They did their final inspection just barely 5.5 months later on 4/6. They listed the property on April 20th for $175,000. They got it under contract within 3 weeks for $172,000. So they listed it for the appraisal amount. They got it under contract just $3,000 under asking price, and that property is going to be selling. Now, when it's all said and done, the investor on this deal is going to make $34,379.74. $34,379.47. Now, that doesn't mean a lot for you guys because many of you are here because you're looking for those double-digit returns without having to do all of the renovation and the fix and flip on these types of properties, right? And I get that. But what you guys are here is the note buyer. Now, this note, the person who bought this note earned 10.49% and received monthly payments on this note starting in October and will continue to receive monthly payments on this note. This property is scheduled to close at the end of the month, at which point the investor on that is going to get their money returned, but they will have received those monthly payments over that period of time, okay? Now, I want to take you guys to our website and show you, nope, I want Secured Investment Corp. There we go. And if you guys have not been here before, feel free to go here with me, because right here when you come to the first page, you guys can see mortgage notes, right? So all of these mortgage notes, and here for sale are properties, available mortgage notes is what I want to look at. These are properties that we have already gone in and we've already done all of the due diligence. Just like on that deal I showed you, we've already done all of the due diligence. And the due diligence is all available to you guys if you want to look at it. We will show you the appraisal, we'll show you the funding sheet, we can show you all of the draw requests, we can show you the escrowed funds. Everything about every loan is available to you right now. Now here's one we just funded. This is in Burns Canyon Road in Pioneer Town, California. This is a $428,000 loan. And if you were to buy this loan right now, you would get an 11% return on your money. However, for this month, we are running a special where any note that is under $200,000, like this note, for example, here for $84,500, we will give you a 1% increase. If you were to buy this note for $84,500, we'll give you a 1% increase because it's under $200,000. However, if you were to buy this whole note right here for $428,000, we would give you a 2% bump. So any loan over $200,000 right now, we are giving you a 2% increase on your annualized yield. So think about this. You've got $428,000 sitting around, possibly in a bank account, a mutual fund of some kind, and it's probably earning between 3.5% to 6% interest. If you have it in a money market account, it's probably earning that 3.5% to 4%. If you have it sitting in a CD, it's probably earning between 1.5% and 2%. Did you know that you right now could take that $428,000, buy this note, and be earning 13%? Now, if you take $428,000 at 13% interest, that's $56,000 a year. Divide that by 12. You're getting $4,636 a month just because you purchased this whole note. Okay. Now this one over here, you'd be getting an 11% return. So if you got $84,500 that you want to invest into something, that one would be paying you 11%. That means you'd be getting $774 a month, and you would generate $9,294 a year in income by buying this note. Same thing here. Here's a $112,000 loan. This one would be paying you 11% return. This one right here, this is a borrower you can see has paid back Kogo Capital 9 times. So this is that repeat borrower that I was telling you about, where we'll have investors call and say, hey, do you have any more of this particular investor's deals? And you can see that the target return is a little less because there's so much less risk on this borrower because they have done this repeatedly over and over and over again. Because of that, we have to write the paper at a lower price point because this borrower has what we call reputational capital. They've borrowed, they've paid it back, they've made all of their payments on time, and they've paid it all back. And they come back and they do it again and again and again. Okay. Now, I want to jump into the questions here just as we're going through this, because Curtis Jones says, hello, everyone. Hello, Mr. Leonard. Curtis Jones, good to see you here. Thanks for joining me today. Vicky says, what if you have an owner who wants to sell the property, but only through a quitclaim deed? Okay, so Vicky, your question is more tied to real estate acquisition, not so much the note side. So let me put on my real estate acquisition hat real quick. If you have a seller who only wants to sell you a property and issue you a quitclaim deed and not a warranty deed, you have a seller who doesn't know what is on title or knows that there is something detrimental or damaging on title, and so they don't want to give you a warranty deed which says the title is clear. Okay? Vicky, I can tell you I would personally not purchase a property where the seller was only willing to issue a quitclaim deed because they know that there's something there. Furthermore, you're not going to want to close the deal without taking it through a title company where you would get title insurance. And a title insurer is not going to issue a policy of title insurance on a property where the seller is not willing to issue a warranty deed, because it's a red flag to the title company as well that says, hey, there's something wrong with this borrower, there's something fishy going on, and we're not going to insure this thing because they're not being forthright with what they know. And so, Vicky, I would be very hesitant to do that type of a deal, okay? Charlize Arnold. Charlize, are we related by chance? I'm not sure. We might be. Charlize says, is there a way to broker these notes to other investors? Yeah, Charlize, there is, because if you know, for example, like let's go back to this deal in California. If you know that we're paying 13% and you have another investor that has 428 grand laying around, you could call up that other investor and tell them, hey, I work with a company called Secure Investment Corp. They lend nationwide. They do an amazing job underwriting files. They've got exhaustive due diligence on every deal, which I can provide for you. And if you would like to earn 10% on your money, you could right now fund this note for 428 grand. Now, Charlize, if you bring me an investor who buys this note for 428 grand and they're willing to earn 10% on their money, and you know that on this deal, because of the special that we're running right now, you know for a fact that we're paying 13%, you can get the 3% spread. Now, Charlize, and for all of you, this is what is referred to, and I want you to write this term down. This is what is referred to as sub-servicing, okay? So sub-servicing is where you get an interest strip by selling the loan. And the great thing is there's no licensing requirement for this. You don't have to be a licensed mortgage lender or a licensed registered investment advisor. You simply, when we fill out the vesting information packet, we will put that the investor buying the note is getting 10%, and Charlize Arnold, the investor who brought us the investor, is going to get 3%. Now, Charlize, the way that this would break down, okay, of the 428,000, 10% of the payments, or 3,566, would go to the investor that you brought in, okay? Now, Charlize, you're going to get 3%. Now, this is not 3% paid up front. This is 3% that's going to go to you over the course of the 12 months, all right? So to figure out what you would make on this, Charlize, you take 428,000 times 3%, which is 12,840, and you divide it by 12. 428 times 3 divided by 12. Charlize, you would make $1,070 a month every month that this borrower made their payments, okay? Now, if you are here right now and you have 428 grand or 84,000 or 112,000 or 86,000 or 172,000 or 110,000, right? Any amount that you see, okay? If you have that amount of money, you right now can be buying notes directly from us. You don't need to wait for somebody like Charlize to contact you, bring you to us, and then you get 10% and they get the 3% for bringing you in. You guys can come direct. However, Charlize, And all of you, whether you have 420 grand or not, you can actually be going out and bringing lenders to us who want to buy any one of these notes, and we will structure a sub-servicing deal with you. So you know that on any loan under 200 grand, we're paying a 1% upcharge. So this note, for example, at 12% would pay 13%. This note at 108,000 would pay 13%. And you guys can go through our website. I mean, there's millions and millions of dollars worth of notes that are available for sale here. So just help your investors find the one that might work for them. Okay, here's one under 200 grand. That one would pay 12%. And you can see we've got a lot of loans under that $200,000 price point. But now we get into some more. Here's one at 234. Okay, that note's going to pay 14% interest. Here's one at 231. That one's going to pay 13% interest. Here's one at 620,000. That one is going to pay 11% interest. And guys, this is in Carlsbad, California, a condo in Carlsbad, California. Now, here's something else that's really neat, and a lot of people don't realize this. Now, you do have to be an accredited investor to purchase partials, okay? So partial loan, for example, let's say that you like Carlsbad, California. And if you've ever been to Carlsbad, California, you can't help but like it. It's beautiful, right on the water, just a lovely area, right? Well, here's a condo right in Carlsbad, California. You think, you know what? I think if I'm going to lend money, I want it to be in Carlsbad, California. Great. If you are an accredited investor, which means you make over $1 million, or you have over $1 million in investable assets, or you make over $200,000 a year, as a single filing taxpayer, or you make $300,000 per year as a married filing jointly taxpayer, you're an accredited investor, all right? You could right now buy, and we only sell partials in $50,000 increments, but you could buy $50,000 of this note, and you would be earning 9% on your money. Okay. Now, there's no bump when you buy a partial. You get the stated note rate. Okay. The bump is for those who are buying whole notes. So again, any note under 200,000 is getting a 1% bump. Any note over 200,000, like this one in Jamestown, New York, if you were to buy this loan right now for 227 grand, you would be getting a 12% annualized rate of return. Okay. Here's a note in New York. You could right now, if you're an accredited investor, you could buy a $50,000 partial in that note. Now, be aware that as a company, we will only sell partials up to 49% of the total face value of the note. Okay. So we're not going to sell $498,000 of that note in a partialed environment. We're only going to sell up to 49% of that note in a partial, okay? Now, before we get any deeper into this, I want to give you guys this slide, because what I want you to do next, okay, I want you to either scan that QR code, or you can go to that website, or you can even call that number on your screen, and I want you to have a conversation with somebody from my investor relations department, okay? And I want you to tell them, hey, I'm interested in buying notes. What does that look like? What could you do to help me? They can have conversations with you about possibly rolling 401ks from a previous employer into a self-directed IRA. They can talk with you about potentially setting up a solo 401k if you are a business owner or you are self-employed. They could talk to you about utilizing a home equity line of credit against your primary as a vehicle to create liquidity to purchase notes. They could talk to you about rolling retirement funds into a self-directed IRA environment to buy notes. There's a million different variations of conversations that you could be having with our investor relations team, but I want you to be having with them right now. Guys, every day, and again, this is why I looked at my personal 401k balance this morning, is every day I've got hundreds of thousands of dollars of cash sitting in an environment that is not generating 11 and 12 and 13 and 14% rates of return, which sucks, because I'm showing you right now there's a place you can go, and within just a matter of days, 24, 48 hours, it does not take very long for us to transfer a note into your name. It's a simple assignment. We record the assignment and we continue to collect the monthly payments on your behalf, and we will send your monthly payment to your IRA custodian, to your financial advisor, to your own personal bank account, whoever's managing your money for you. And if it's you, we will continue to collect payments from the borrower and simply send you your check. So all you now need to do is just look at your balance statement in your 401k, your IRA, whoever your custodial firm is, and you're just going to see that monthly check being deposited right into your account. That's why buying notes, in my opinion, is one of the best, highest yielding passive investment opportunities that you could possibly participate in, where your money is secured against an actual physical property, where somebody is investing their time, energy, blood, sweat, and tears into turning that property into something better than what it was. Now look at this one up in Hayden, Idaho. This is right here in my own backyard. $288,000 loan on a property worth $450,000. Borrower has great credit, 737, 771, 755. Guys, this is the type of borrower you want to be lending money to. This is the type of borrower that you can rest and sleep well at night knowing they have tremendous credit. This borrower over their career has done a great job paying off creditors. So as we're looking at and reviewing different notes, there's just things that you guys can look at. Here's one. This borrower's paid Kogo off 4 times. This is in Clearwater, Florida. I don't know if you guys have been to Clearwater, Florida, but it's one of my family's favorite beaches in America. And the great part about notes, and let's talk about the ugly side, right? Well, okay, Lee, these are all the pros, but what are the cons? Well, the cons are, if you buy that whole note and that borrower stops paying you for any reason at any time, you're going to end up owning the property. Now, there's an old joke in this business. Here's the joke. What do you call a private money lender, or in your case, what do you call a private note buyer in a recessionary downturn? Recessionary downturn meaning that the market has shifted, income payments are not coming in, people aren't making their payments, defaults are on the rise. Okay, so what do you call a private money lender or a private note buyer in a recessionary downturn? And the answer is landlord. Okay, that's the beautiful part of the note business. If the borrower at any time stops paying you, you now, as the whole note holder, have the right to foreclose on them, take possession of the real property, and now you can do with it what you want. Do you want to keep it as a rental? Do you want to finish the renovation on it and sell it for profit? Do you want to sell it as is to recover your investment? There's a million different strategies that you can utilize to protect your investment on these deals. So for me, I like to invest in notes on properties that I know if I have to take them back, they're going to cash flow. Okay, look at this one here in Alabama. This is a $157,000 loan. Now, if you look at this, watch this, okay? If we take this property address right here, okay, that's good. All right, so here's the bigger version of that. If I take this property address right here, and I'm just going to go up and I'm going to go into Zillow on it. It's a $157,000 loan. And you can see here, they bought this for $115,000, so this is a rehab loan. But when we go in here and we look at the Zillow overlay, look at the lot lines, okay? The house next door is $171,000. The house down the street is $139,000. The house is over here, $143,000, $153,000. Here's a $141,000. Here's a $151,000. When they get done fixing up this house, they're probably going to be selling it. Here's one at $227,000. Here's one at $171,000. Here's a $168,000. If we end up, here's one at $190,000. If we end up having to take that property back for any reason, we've got a house that has tremendous upside because of what they paid for it, the amount that they have going into it. This person brought $19,000 down when they bought the property. Their plan is to fix it up and sell it for $235,000. So here, this is right on our website, you guys. So here's more information. Loan amount, purchase price, market value, down payments, LTV, monthly payment amounts, $50,000 being held for rehab. This loan matures next March. This one's paying 11%, but you get a 1-point bump on that, so you're getting a 12% return on this property. Average credit 720, and this average balance is the average amount of money that the borrower has in their bank account at any given time, $67,000. So this is, again, a great loan, nice property, 4-bedroom, 2.5 bath, all right here on our website. Okay, let's go to a couple more questions here. Let's see here. Arlene says, if the borrower needs extra funds for unexpected expenses to finish the rehab, is the new loan amount the lender's responsibility to pay in order to receive the best return? If the borrower needs extra funds. Arlene, if the borrower needs extra funds, those extra funds are going to come from them, the borrower, not from you, the lender, not from us. We underwrote the file. We got the contractor bid. We got the appraisal. That's the amount of money that we have allocated to put into the property to make it be worth that higher amount. Okay. So if the borrower needs extra money, that's going to come out of their pocket. The loan amount will not change. Okay. Sukari says, can you email me the procedures for wholesaling your notes? No, Sukari, I cannot, because there is no procedure other than go find me somebody that has a couple $100,000 laying around that wants to get a better rate of return on it. Go to this site. So you all should take a picture of this site. Okay. This has the QR code for scheduling the appointment. This has the phone number. If you guys are ready to go, you want to buy a note right now, you can call that number 208-991-1420. Or you can book the appointment right there at that website, securityinvestmentcorp.com/note investor. Okay. So Sakari, all you're going to do is you're going to talk to your investor. They're going to say, yeah, if I could get a 9 or a 10% return, I don't mind if you get a 2 or 3 point spread on the deal. You say, great, let's go to this website. You guys go to our Security Investment Corp website. You start looking at different loan packets together. And then you contact our investor relations team. They will send you all of the information related to every note that your investor wants to look at. And then when we close the deal, your investor wires the fund to close the deal, that's when we will send you what's called the sub-servicing agreement. Okay. So Sakari, I want you to write down this term. All of you, please write this down. The sub-servicing agreement. Okay. Alice asked this question. Okay, Lee, if they stop paying, who does the foreclosure? Alice, that is up to you. If you hold that note, you can do the foreclosure yourself if you would like to, or you can have Lake City Servicing oversee that foreclosure. And we do provide foreclosure mitigation services on behalf of our investors. If you end up getting it back at foreclosure, we will happily connect you with our local investors in that market. We have a database nationwide right now, about 1.3 million investors across the country. And we have investors and boots on the ground in every market in the U.S. So if you end up owning one of these properties and you would like to offload it, we can refer you to our local realtors in those markets. We can refer you to our local investors in those markets, and we can help you offload and sell that asset if you do not want to own it anymore. Okay. So we are here. Because guys, understand something, that when we sell you this note, for example, this one right here in Tennessee, Nashville, Tennessee, by the way, crazy market. I'm curious, Nashville is my favorite city in America. Okay, so I just want to take this loan and I want to go up here and see what is the zest on this one, because Nashville is just out of control. Yeah, look at that. $300,000 valuation on this house in Nashville, very near the river. So here's the street that this property sits on. This house, here's a new construction happening over here, church just down the street. Again, looking at the overlay, this is very near the river. And I just love Nashville. Any other lovers of Nashville out there? Yeah, here's the Cumberland River. Here's the property near the golf course there. If we look at the lot line overlay, look at the neighborhood. Yep, 300, 314, 391, 332, 242, 235. And this note is written at, let me go back to our notes here. There it is. Okay. So this loan is 172,000. They bought the house for 158, market value 265. Zillow says 300. We wrote that note. That one matures next May. That one's earning a target yield of 8%. Now, my point in telling you guys this: when we sell you these loans, look at the average balance of that borrower. At any given time, they have 955 grand sitting in their bank account. This is a very safe loan when you consider the amount that they put down, the price they paid for it on a $300,000 asset in Nashville. But we wrote that note. We're offering you guys 8%. We probably wrote that note to the borrower at 11%. And this is what I wanted to tell you guys. When we sell you loans at these note rates that I'm showing you here, we are also getting a sub-servicing spread, okay? So this target return of 8, we probably wrote that note at 11 or 12. So when I sell that note to you, I'm still making 1 or 2% myself on the spread. I'm telling you that so that you guys know we're in every single note you buy from us. We still have a vested interest in that deal. So it's not, okay, here, it's your note now, your problem. No, because every month that we don't collect a monthly payment, we don't get paid either, because we have a yield strip on every single note that we sell. And that's what makes us very unique from anybody else out there that's selling paper. They're usually selling paper and giving you 100% of the note rate, which means when you buy that note, they're out. And so if that borrower continues to pay or not, they could care less. They've kind of just, here, your problem, you deal with it. No. When you buy a note from us, we're in this deal together because we're still getting sub-servicing strips on every monthly payment that we collect. So we have a mutually aligned interest in making sure that borrower pays, funding loans to good borrowers who are going to pay us back. And guys, it's the reason why our entire portfolio has a default rate of less than 3%. That's huge. Less than 3% of our loans will ever go into default. And as an investor, that should make you feel really, really good. Okay. So Alice, that's the answer to your question. We will oversee the foreclosure, but you own that note, so you have to empower us to oversee that foreclosure on your behalf. Mark Greger asked this question. He says, Lee, can we split a note among 2 investors? Yes, and Mark, I'm so glad that you asked that question, because not only can you split any one of these loans amongst multiple investors, you can also split these loans amongst multiple accounts. So for example, Mark, if you have cash, you have money in a self-directed IRA, your wife has a self-directed IRA, your kids have a CISA account. Let's say, for example, this loan right here for $245,000, okay, in Inglewood, Florida. So Mark, you put up $100,000 in cash, you put up $50,000 out of your self-directed IRA, you put up $50,000 out of your wife's self-directed IRA, and then each one of your kids puts in $15,000 out of their retirement accounts, okay? So you would have essentially 5 account holders, you, your wife, your 3 kids, making up the 245 grand. Now, when we collect the money, so Lake City Servicing will do all of this for you. We will collect this monthly payment of $2,041.67, and then we will send the correct allocation to each entity that has an interest in it, okay? So Mark, your personal checking account that put out 100 grand is going to get 1,000 of that 2 grand, okay? Your IRA is going to get $500 because it put up 50 grand into this note. Your wife's IRA is going to get $400, and then each one of your kids' retirement accounts, they each put in $15,000 a piece, so they're each going to get like $150 each, okay? And that'll happen every single month. So we will collect the $2,041.67 here, and then we will wire to 5 different accounts. So Mark, you can get very, very creative, and I'm glad you asked the question, because a lot of people, they look at this 146 grand and they go, oh, well, I don't have 146 grand laying around. Well, maybe not in a single account, but when you consider 401k, solo 401k, self-directed IRA, CISA account, retirement account, husband's account, wife's account, life partner's account, I mean, you can patch together 146 grand pretty quickly, okay? But if you don't want to do that, you can, if you're an accredited investor, you can just buy a partial. Okay, Daryl Smith says, what about the Cleveland, Ohio area? Well, Daryl, let's go up here. And I want to look for location. Target area, select state. Okay, so I want to look at anything available for sale in Ohio. And here you go. Okay, so Daryl, Mansfield, Toledo, Independence, Cincinnati. Okay, so Daryl, I currently don't have any notes available for sale in Cleveland. But Daryl, I'm glad you asked the question too, because for those of you that are looking for specific states, for example, if I want to buy loans in Florida, I can just go here, and here's all the loans that are available in the state of Florida. Okay, so you can just make it up. Now, what is not uncommon is an investor will contact our investor relations team, and they'll say something like, "Hey, I've got 800 grand. I'd like to break it up over 4 or 6 notes, and I'm looking for a blended portfolio yield of, let's call it 10.5. I want properties in non-judicial markets. I want borrowers with 680 credit scores or better, and I want deals where the borrower put down cash." Okay, so you could have that conversation with any one of our investor relation members, and they can go through our portfolio and they can start slicing and dicing and looking for the loans that meet your various criteria, and then they can call you back and say, "Okay, I've got this loan in Daytona Beach, Florida for 160. Actually, I'm going to go back here, and I'm just going to say all. And so let's see, 800,000. So I want loans between 1 and 200,000. Actually, if it were me, guys, if I had 800 grand, I would tell my investor relations team member, I only want stuff where I'm going to get at least 12%, and I would like collateralized over 3 to 4 loans. Okay, so I'm going to do this one in Pocatello, Idaho, because Pocatello, Idaho is non-judicial. So I'm going to buy this one for 217. So there's 217,000. And then, Texas. Texas is non-judicial. I can foreclose very quickly there. That's over 221, so I can get 11% on that one. This is over 200, so I'll get 11% on that one. So I got this one in Texas for 221. That's also a non-judicial market. Let's see here. New Orleans, New Jersey, South Carolina. Oh, here's another one in Texas for 290 at a 50% LTV. The borrower put 116 grand down. That's a beautiful home. That's 290. Okay, so I've got, that's $728,000 in loans. I told you I wanted 800,000. So I need a loan for 81,000. Okay. So I got these 3 non-judicial notes getting me a blended rate of 11. I still have $81,000 that I need to place. So I'm going to go here and I'm going to look for stuff under 100 grand. And now your investor relations team member is looking for one. Okay, so I can put you in this one right here in Birmingham. This one's paying 8, so I can get you 9 on that one. And that will be, $795,600. Okay, you now wire the $795,000. We will do all of the trade confirmations here internally. We will do the assignment of mortgages on those 4 loans that you've picked for your 800 grand. And you'll immediately, from that day forward, you will get the daily interest from the day we do the transfers. Those are your loans. That money now comes to you. Okay. So on your 800,000, actually it was your $795,600. We got you a blended rate of 10.86 roughly. 800,000 at 10.86 is $86,000 a year. You're going to start receiving monthly payments of $7,240 on your $796,000 investment. You guys see how this works? Okay. So again, you guys, there are so many scenarios here that exist that I can't possibly cover all of the possibilities with you. But what I can tell you is when you talk with somebody in my investor relations department, they can and will cover all of the potential possibilities with you. So if you want to talk to somebody right now, you're like, oh my goodness, this is awesome. I'm ready. Let's do this thing. Just call 208-991-1420. We are live. They're watching as well. so you can reach out and talk to any one of them. Or if you'd like to schedule a time, I know many of you are probably work. I know it's the middle of the day for some of you. You can just scan that QR code and you can go right into their appointment calendar and you can set an appointment with them. Or you can go to securedinvestorcorp.com/note investor. Okay. Lisa Lyon says, I'm not seeing WS here in terms of property condition. WS. Lisa, I'm not sure what you mean by WS. Can you retype that and spell that out? Charlize Arnold says, is the note buyer responsible for payments to Kogo if the loan defaults until it is foreclosed on and then sold or rented? Is the note buyer responsible for payments to Kogo? No, Charlize, because you own the property. Yeah, I'm sorry. Charlize, you own the note, okay? So if the borrower defaults, you don't owe Kogo anything. Now, what you're referring to, Charlize, is where we wrote the note at 11 and you're earning 9, okay? Do you have to continue to pay Kogo? It's 2%. And while, Charlize, that would be awesome, that's not how we do business, okay? If you're not getting your 9%, we're not getting our 2%. And that's why we are very motivated. When you buy a loan from us, we're not leaving you in the lurch, because if you're not getting paid, we're not getting paid either. But the thing I want to, again, remind everybody, guys, we have a less than 3% default rate. So for every 100 loans that we write, originate, and sell, 3 of them are going to have payment challenges. But rest assured, we're going to work with them through those payment challenges, because we want to get them paying again, because only when they're making their payments are we actually getting paid too. So like I said, we are in this together. We have a mutually aligned benefit. And we want to make sure that borrower is making those payments just as much as you do, okay? Lisa, you mentioned as is and ARV. How does condition play in here? Great question, Lisa. The as is condition is what it looks like when they're borrowing it. So let's look at this one here in Battle Creek, Michigan. And again, guys, what I'm showing you here is live on our website, so you guys can go to our website at any time and do everything yourself, what I'm doing here. On this one, the borrower bought this property. Let's see the as-is value. Let's see here. We lent them $82,500. They bought the property for $85,000. The loan amount on this one is $82,500. So they brought $19,000, or they brought $31,000 down. We are holding $19,000 for rehab. This loan matures in August. They have a 756 average credit score. You're getting an 8% rate of return on that one. It's a single family, 2-bedroom, 1-bath property. This is an after repaired value purchase. So they're buying it for $85,000. So the as-is value lease on this one is $85,000. The after repaired value is $110,000, but we made them bring $31,000 in just to reduce the risk profile on this loan. But they've got great credit. They've got $56,000 average money in the bank. So that is the difference, Lisa, just between the as-is versus the ARV value. Okay, so Lisa, I'm not seeing wholesalers here in terms of property condition. I'm not seeing wholesales here in terms of property condition. Lisa, we don't fund wholesale deals, okay? So all of the loans that we are originating are going to be one of 2 types. It's either going to be a fix and flip, so they're buying it, we're holding back money to do the escrowed repairs, we're managing the escrow process until it sells, and then that loan is paying off, or they're buying that property as a rental. So they're buying it to hold it. We have 12 and 24-month loan programs available. And then we will refinance people into a 30-year product after they've held the property for 12 months. So our loans are either going to be fix and flip or buy and hold. We don't do any wholesale transactions at all. It's just too much work for too little reward. Okay, Michael Murray, and I'm going to end with this question. If you guys have any other questions, again, I want you to contact your investor relations team. Here again is their contact info. Michael Murray says, what are the typical terms or length of these loans for Secured Investment Corp? Thank you, Michael, for asking. Our maximum loan is 24 months. Okay, we will not write paper longer than 24 months. Our loans are interest only, so there's no principal pay down on these loans. If you buy a note for $100,000 and it pays off in 24 months, you're going to get 100 grand back. So you keep 100% of your monthly payments. Those are interest payments only. People are essentially renting to use your money for 12 or 24 months. Now, Michael, if we write the loan for 24 months, we require that the borrower prepay the next year's taxes as well as the next year's insurance. So we will escrow to make sure that during the 24 months of that loan, that the taxes will not be delinquent and the property will ever be uninsured. So Michael, we are tracking our entire portfolio. We're currently servicing almost 1,000 loans. We will track the entire portfolio for taxes, for insurance, and make sure that those borrowers have paid the tax and the insurance so that your loan will never be at risk of going to tax sale or something like that. So as your servicing company, we are checking all of that out for you. So when you guys look at this from just a holistic standpoint, okay, we educate the borrower on the front. We teach them how to invest in real estate and do it the right way. We teach them how to find great deals, negotiate great deals, and offer the right amount so that they can come out of this thing profitably. We lend them the money to buy it, fix it, flip it. They keep 100% of their profit. We originate the loan internally. We write it at 9, 10, or 11, or 12% interest. We then sell that note to one of you guys as a whole note sale or a partial if you're accredited. We continue to service the monthly payments. We'll send you a check every single month. And then when that borrower is ready to pay that note off, we will provide them the payoff amount. We will collect that money from the proceeds of the sale, and we will then wire that money back to you. Now, full disclosure, when you have acquired a note from us and you have a payoff, okay, so let's say that this house in Battle Creek, Michigan, they get it fixed up, cleaned up, and now they pay that loan off. So here comes your $82,500 that you put into this deal, okay? Before we send you your $82,500 back, we're going to say, hey, and I'm going to use you in this case, Michael. We're going to say, hey, Michael, do you want your $82,500 back, or do you want to talk with somebody in investor relations and redeploy your capital? Okay, so you've got $82,500 now. If you want to add $2,000 to that, you could buy this one here in Michigan. $82,500. Here's one for $86,000. Here's one for $62,500. So we could say, hey, Michael, do you want to take your $82,500 and put $62,000 into this deal, and we'll send you your $19,750 back? What do you want to do? A lot of our investors, guys, we've been doing this now for over 20 years. And so a lot of our investors don't want their principal return. They just want it redeployed. And when you're getting 9, 10, 11, 12, 13, 14% rates of return, and a third party is collecting payments and just wiring them to your bank account, why in the world would you want your principal back? Okay. And what we teach here, we want every single one of our investors to get to a place where they have enough cash deployed that the interest that they're earning on cash or on their capital deployed is enough to cover their own personal living expenses, mortgage payments, car payments, insurance, health, medical, whatever you got. But think about it in these terms, you guys. If you had $1 million deployed with us in any one of these notes, and let's just call it a simple structured portfolio of 12%. Okay, $1 million at 12% is going to pay you $120,000 a year, which means you're getting $10,000 a month. This is, in my opinion, the right way to retire, not in a 401k where I'm making 7%. This is the way to do it, okay? So I want all of you to contact investor relations. I want you to have a conversation with them about how you can get started, how maybe if you don't have money, you can get your family's money started. You can get your friends and family's money deployed into these types of opportunities where you can negotiate some type of a yield spread or credit strip with them so that you can start earning monthly payments as well. But all of these things are only possible if you contact investor relations and have a conversation with them about how to get started, how to get up and going. There's no fee for this. We don't sell programs around this. It's simply you guys buying paper, and that's why I'm here today. I got paper for sale. I'm offering 1% bump on any of our stated note rates on our website for the next 30 days. So 1% on anything under $200,000, and I'm giving you a 2% bump on anything over $200,000. So get a hold of investor relations guys, securedinvestcorp.com/note-investor, or call 208-991-1420, or you can just scan that QR code. It'll take you right to our appointment setting calendar, and you can get locked in with them. Okay, guys, this is the first time I've done anything like this. So before you go, I'd love some feedback, right? What would you like to see more of? What can I do differently or better? How can we better serve you guys as our customers? Or if you just thought it was amazing and you had a great time, you can say that as well. But please leave me some feedback before you go here. And I'm also going to be talking with investor relations today and the rest of the week, and just seeing how did their conversations with you guys go. And how many of you are we going to help get started in the note investing business? It really is just an incredible business for all of the people that it benefits and blesses as a result of your investment dollars going into this paper. So leave those comments. I'll be looking for comments for investor relations. Thank you all for joining me here today. Your time is valuable, and I appreciate you investing it here with me. And looking forward to working with you in a future capacity. All right. So God bless you guys. Have a great rest of your week. We'll talk to you soon. Goodbye, everybody.